Mayuresh Joshi is with us, head of equity at head of equity research at William O'Neill. Mayuresh, thanks for waiting. Appreciate your time here. Let's just dive straight into some individual names here, because markets, of course, not too much by way of Q. Keynes, if you have a view, sold off pretty sharply yesterday. Keynes Technologies. That Kotak note was doing the rounds. They dated the 3rd, which is day before yesterday. Some concerns around working capital, etc. So if you have a view there on Keynes. And Hitachi is the other one. Low this year was about 8,800, still at about 20,000. Nimesh was talking about Hitachi in his D Street Chatter segment yesterday, saying that the market is fearing loss of a contract to a rival company. So these two names, Keynes and Hitachi.
Morning, Prashant. No, as far as Keynes is concerned within the EMS space, obviously I think the Kotak note has created a sentimental impact. But apart from that, I think what really is happening for these players is there is expectations of a strong tailwind coming through in terms of both the PLI incentives as well as revenue growth coming through different product segments. But the margin profile still continues to remain restrained. Because the ODM part, which is the original design manufacturing part, which has a better margin profile, still remains a little soft. And that will take some time as a market share gain, as well as a product mix percentage to probably go higher over the next few quarters. On top of that, I think the clarification that the management will now need to give in terms of related party disclosures, etc., is something that will still play out. Even from a valuation perspective, they're still very, very expensive, Prashant, as we speak. Therefore, I think it's a neutral view that we carry. For Hitachi, I think the expectations in terms of the news that is probably going on is obviously going to create an impact. But if you probably have a longer term view in terms of the structural story, the kind of orders that can come through from a medium to long-term perspective can still be better off with better margins. And therefore, I think the long-term story probably stays with Hitachi, though I think an order loss might create short-term impact as far as near-term revenue visibility is concerned.
I want to just get back to Interglobe. Yesterday, the stock, of course, closed down about 2.5–3%. And the sentiment continues to be very, very negative. I mean, the update, as I'm sure most of our viewers already know, is that Indigo has sought relief. It has sought, an exemption from these new crew rostering, pilot rostering norms for almost 3 months. They're saying give us time till the 10th of February and we'll get, our crew management in order. The DGCA has not yet confirmed this. They have not agreed to it just yet. But that was pretty much the sum and substance of the meeting. And the flight disruptions continue, as you would have seen on the screen already. There are 2 brokerage notes on Indigo. There's one on Citi. Citi is still retaining a buy call, target price of 6,500. Citi is only noting that these new norms will reduce the flexibility in rostering. Normalization could take some time. But the one that's a little more interesting is actually the Morgan Stanley note, the one that's on your screen. Morgan Stanley is still overweight. However, it's cut its target price, in a bit. The bigger issue is it's cut its EPS estimates for FY27 and 28 by 20% on Interglobe Aviation, saying that there is going to be a rise in the cost of average seat kilometer because they'll have to hire more pilots, hire more crew, etc. And that could put a lid on the earnings growth expectations. Mayuresh is with us. Mayuresh, very quickly, big debate on Interglobe. Is this a dip to buy or is it the time to stay away? What's your thought?
So our view is that we don't see a structural decline for 2 primary reasons, Surbi. I think Indigo still controls a majority in terms of the fleets and sky operations. So the market share is relatively huge. Competition is very, very scarce. I think Air India, Vistara through the flights that it operates, and SpiceJet with limited flights. On the domestic scene, it still continues to rule the skies. They're adding new routes as we speak, both domestically and on the global front, which are far more margin accretive in terms of revenue per square kilometer. And therefore, I think if one really perceives that what kind of impact will these norms have, it will have some element of an impact. But on the earnings front, because of the dominance that it probably has and passenger load factors still having relatively higher share because there are no optionalities available, I think structural declines look a little bit improbable at this juncture. So not a buy at this juncture, but we also don't see a structural decline.
Okay, all right. Hi, Mayuresh. Morning. ITC Hotels, a large trade has got cleared out. 18 crore shares changing hands. What's your scene, Mayuresh? Where are you checking in? And view on ITC Hotels.
Morning, Nigel. So no check-in this year. I think my daughter's appearing for a 12th. So
Oh,
staying at home this year. So
wow.
but
Well, Sana, wishing out all the best, Mayuresh.
yes, thank you so much. No, but as far as ITC Hotels is concerned, I think our take is that we still continue holding this stock in our local and global portfolios. Our take is that for the hospitality industry as a whole, I think the organized players are still a very relative small portion. And therefore, I think the strategy that these hotel players are probably adopting, the expectations in terms of average room rates actually staying consistent, the GST rationalization on room rates below 7,500 rupees also probably aids, and the product mix itself. Also, let's not forget the F&B part and the MICE events which happen, which also keep margins at relatively high levels. So I think we continue liking the space. ITC Hotels and Rementry both find a space in our local and global portfolios.
All right, Mayuresh, we'll leave it there. Thank you very much for joining us. Good speaking with you, and really appreciate your time here. Have a good weekend. We'll